Hi, welcome to the Market Alert for Wednesday the 15th of March 2017. So it looks like the Fed is expected to raise rates, seems to be 100% across the board now, so we'll just have to wait and see what the market's reaction is at 6 p.m. this evening. Yesterday though, the market stuck in a range once again, a bit wider than the day before. I think we're about 90 odd points in the first part of the session, 91 to be precise. This gave the market a bit more impetus to put in a few winning trades there. You can see one there. Then we had a second one where the market then found support at that 20,800 level before reversing and then moving back to the upside again for a quick profit. Hands up, I didn't actually trade either of those yesterday, taking the decision that there's going to be plenty of trades from tomorrow once the market's absorbed the interest rate increase that looks to be a given this evening. So as I always said, can stand aside, it's not a problem, part of the discipline process, and save the gunpowder, keep it dry until it's really needed. If you look at the remainder of the session, you can see how sideways this was. The market just trading in a very, very narrow range there. So again, pretty pointless really. You can see how the market filled this one, then came back and took it out as well. So no point really. Just wait until the volatility increases, and it always does. It always comes back. And of course, we got to remember is that there's been no downside yet since Trump came in. Yesterday we saw MSNBC trying to prove that Trump didn't actually pay any taxes, and it shows that he paid 25% tax on his 2005 returns. And again, trumping the mainstream media. It's quite ironic, really. It's anything they've had on him. So it's time to. Well, the question is it time to actually send the markets lower and give him some grief this way? Because as night follows day, it isn't getting any easier by the day for him. The elite and the establishment are making life difficult indeed. In the daily charts, we've still got the high and the low that we put in, which we marked up. Let me just delete this. Let me just rearrange this for a second. There we go. So we've still got the same 76% because we got a more or less a double bottom yesterday in prices there. So again, we're looking for the market to go up to this level and fail and then reverse and move to the downside. News-wise, obviously the big one today, might as well just go straight to it, is the Fed funds rates. You can see that's to go back to 1% from 75 or 0.75. Crude oil inventories as well at 2:30, 6 p.m. obviously because of the hour difference, normally 7, and the same with the crude oil inventories as well. So an interesting afternoon and early part of the evening awaits. We'll just have to wait and see how the market reacts to it. But if it's already priced in, it could just move to the downside straight after. So we've already got the massive move to the upside that we saw in the last few weeks following Trump's speech to Congress. Implied volatility, well, this has been stuck in the sideways range, and anything that's in a sideways range eventually has to break out, and it's always to the upside with the implied volatility. So we've had this narrow trading range now for some time, and it's time that it actually broke out. And the lower the volatility, the more coiling that you get with this sort of sideways move here inside of the range, then the bigger the explosion eventually when the market breaks out. And really that's about it for today. There's not a lot else to report because obviously we're waiting for the interest rate decision tonight and then the market's reaction to it. Right, that's it. I will see you in the next one. Thanks for watching.